And then we take a deep breath. And then we both say unique New York.
Unique New York. I love that. Good.
Always start with the Anchorman quote. And then we just
vagina.
San Diego. Mitchell Money Baldridge. Welcome to a podcast.
Thanks, Eric. Glad to be here.
Am I the first person to give you that nickname?
That's a new one for me, but I'm gonna go change my Twitter handle right now.
And LinkedIn, yeah, LinkedIn, extra appropriate for LinkedIn.
LinkedIn for sure. Yes.
For people who are just listening and not watching, you should know that Mitchell is neither bald nor ridged. Is but much a misnomer. Incredible, beautiful hair that's just flowing. Yes.
I mean, you give me a run for my money, I think.
Yeah, this is a hairy conversation.
This is the hair talent of this is the hair corner of Twitter.
Yes, it is. Okay. So we are going to go through a bunch of stuff today. I know you've already taught me so much. And I hope to get a fraction of that through to share with everybody. I think go through like a client's or a person's journey in their life and their business, talk about some wealth building and wealth preservation strategies, then talk about your business specifically, then end with the degenerate corner, where we go through Web3 and all the cool shit that's happening there, because you might be the most degen accountant in America, which is just a very important thing for I think probably this audience specifically to know where to find. But we should start with your story and I understanding even what is the path to being a CFP, certified financial planner, an accountant. How do you become that? What do you have to learn? What made you want to kind of go down that road in the first place?
Sure. Yeah. So my origin story, I kind of started without really knowing what I wanted to do. I didn't graduate high school and think, oh, I'm going to be an accountant. But along the way, I mean, I think I'm a little older than you, but I started going in college. We were right in the middle of the global financial crisis. And I had a mentor of mine who just sat me down and basically was like, you need to be an accountant. I didn't understand really why. He was like, you'll get a job, you'll get experience, you'll get knowledge, you'll get understanding of how business works. And in being an accountant, you can kind of go do anything. And that's not totally true, but it worked. I didn't come from a background of really knowing that much about how business or the world worked. My parents didn't say, hey, you can be a investment banker. Here's private equity. Here's how a hedge fund works. That kind of all came to me. And I knew there were people in college who were gunning for that track, but I didn't really go to a target school either. So that wasn't, no one sat me down at the beginning of my major and said, hey, do finance and you can do this, do accounting and you can do this, do MIS and you'll do that. So I just kind of picked it and it worked. And I started going to the classes and making some okay grades, but I didn't really even, I got a job at an accounting firm and as an intern, and they start making you pump out tax returns. And I was kind of going through a process, but didn't quite understand even what I'm doing. I just didn't want to make errors. I wanted to get all the numbers in the boxes, Yeah. And then I was grinding and passed my CPA exam, and you learn a lot there, but even then you memorize a bunch of kind of stuff to pass an exam. And that was great. And then, after I got my CPA, I went to go work for a big accounting firm called BDO and was doing tax provisions and tax returns for big public companies, which tax provision is like on audited financial statements, looking at the deferred tax asset or liability and the current tax, which is different than even the cash tax you pay to the IRS, oddly enough. But and so it learned more and more and more and more, but really started learning accounting. I went out on my own about 8 years ago, and had one client and started setting up their bookkeeping and started just kind of going through the full cycle of, this is how you keep books, this is how you serve clients, and you go year after year after year, and you start to see, oh, it's not just 1 year, it's or I always talk about like Newton's law of tax, like what goes up must come down. So you start making mistakes and then watching those mistakes play out over a 3-year period, and or just seeing how you could have optimized better. And I've really learned over this, call it 15 years, to really start thinking about the end from the beginning. So back to your question, I mean, you go to college, you get 150 credit hours, you sit for the exam, you pass the exam. Once you have the accounting credential, you can kind of protest your way into the CFP. You sit for that exam, you pass that, here you are.
Which is a totally separate thing, right? It's not like the CFP is a thing that happens during your career, right? Not in college.
Yeah, not in, I think there are college kind of study tracks to kind of expedite your way to a CFP, and being a planner is certainly a career track.
Mm-hmm. So, which is like independent, could be independent of accounting. Yeah. So you're like, you're uniting, I don't have the good, terrible metaphor that I should for this. You're
Captain Planet.
Yeah, you're Captain Planeting. You're transforming, two different careers together and synergizing them here.
Yeah, I need to become a lawyer and a medical doctor, and then it'll just be the whole thing,
Yeah. Oh God. Yeah. I saw this guy who's like a astronaut and a Marine and a doctor or something. He was like 38 or 32. I was like, how is that? Not even using any of that stuff.
That's What do you know?
Yeah.
You're 32. You know nothing.
But if we ever need a medic for like a space, like military mission, that's going to be.
Yes, that's it.
He's the only guy to call.
One-on-one.
So where do you end up now? How do you like describe the combination of kind of like skills and talents that you have to, potential client or something?
I feel like now I'm really planning focused. Mm-hmm. So my business today, I own a CPA firm, and I also own an RIA, a registered investment advisory firm. And I don't have $1 under management. That's just how I'm structured today. I don't manage people's money. I really take my tax knowledge, which is a huge portion of my clients' kind of expenses in their life that, go out the door and they're not excited to pay them. And really, we do full service financial planning. So we cover, insurance, investments, retirement, kids' college, estate planning, kind of run the whole gamut there. And then I have this obviously heavy tax focus in terms of optimizing tax planning. So my kind of ideal client today is a entrepreneur who has a high net worth and who has a very concentrated portfolio in something that is not index public markets. That's very illiquid and very concentrated, and they still have to plan their life around that. But I always say, like, they don't get the love from the private bank because there's nothing to take in custody and fee. But they have arguably more complex lives than a lot of these.
For sure. And usually higher like net worths than, so you don't care about like the doctor with a, big retirement fund. You want to work with like entrepreneurs, small business owners. What is like high net worth in that world? Where does that start to like become relevant?
A huge relevance point is that 20 million figure today, because a married couple, the gross estate exemption today is $24 million. So if you are either trajecting toward that 20 million or above that 20 million today, and you don't have a will, there's a lot of planning that is way down the road planning, but trying to get your assets out of your estate before you die. I mean, those are people who just show up in, I can immediately make a humongous impact that over their lifetime is going to save them millions of dollars. So that's always exciting.
What happens at that 20 million? So the tax exemption, the lifetime tax exemption, that just means the estate gets taxed at like a way higher rate, right?
There's essentially a wealth tax on estates, and most people who have less than $20 million in their gross estate, that it's inconsequential. But once you have more than $20 million in your gross estate, you get taxed very quickly at a very high rate. And so people try to do planning in their life to kind of port assets out of their gross estate and try to have, once you hit this level of wealth, your biggest concerns become estate tax, asset protection, and then trying to move your wealth through your family without ruining everybody. Keeping your kids off drugs and
no kidding.
Longevity, people want to live forever once they hit that point too, because
you earned it.
Going pretty well.
And you're having a good time. You're
compounding.
Your money's working harder than you are, so you have your time with you. Okay, so that's the kind of maybe end state. Well, let's go through the like lifetime maybe of like an entrepreneur who ends up on that track. Like, what does the beginning of the path look like? When should they maybe start working with an accountant or a planner?
I wrote this thread a couple of, I don't know how long ago, a couple of weeks ago or something, about like lifetime tax rate, and this idea that I've just been noodling with, that they have your marginal tax rate, whether it's 24% or 37% or which means what's the tax on the next dollar you earn. And then they have your effective tax rate, which is the total dollars of tax you paid divided by the total amount you earned
over your whole lifetime.
Well, they have it at a yearly, every year you kind of consider that, what was your effective tax rate? Even if you're in the 37% tax bracket, your effective tax rate's 21.1%. And then if you make $100 million, you're at the highest tax bracket, you're at 39.6, and your effective rate is basically the same because you ran all the way through the brackets. Well, over your whole lifetime, you want to consider that as well. What is the total amount of money you're going to pay in your entire life and death, and what's the total amount of money you made in your entire life? So total tax divided by total earnings. And so, I mean, I would say people who are going to earn a lot of money in their life and pay a lot of tax in their life should start thinking about this very early and optimizing for this very early, because the early years are huge opportunity years, because you're not paying very much tax and you can start to shove income into those years. You can use Roths, you can kind of do everything you can do to prepare for those later years where you're just going to be hammered and not really have much you can do about it.
And your compounding opportunity cost early on in life too. Putting away $1,000 post-tax when you're 25 versus 45 is a huge difference.
Yeah. I mean, you look at that calculator and,
Yeah.
30 years does a lot for your money at 6, 7, 8%.
Yeah.
So certainly, I think even somebody like Dave Ramsey is just, I read even, I think on Twitter, or I read on Twitter a couple of weeks ago, someone said like Dave Ramsey is good when you're getting rich, and then it doesn't work when you are rich. And
Yeah.
it's probably true, but just for young people and for, most people, frankly, just getting out of debt, staying out of debt, not blowing up, not taking on too much risk, growing your income, really focusing on those things helps you at the beginning until you really do have enough of a platform to then kind of hit the next speed. And, whatever that looks like, where you can actually earn yield on your money that will, or you can go invest your money, or you can go use leverage to really make a difference, to get to jump to that next level. But someone like our buddy Sweaty Startup talks about this, that you effectively use, Nick says,
Yeah.
real estate's not a great path to wealth. You have to have this, fuel that you put on the fire to start the snowball. I'm going to mix a bunch of metaphors here, but you can't really, you use real estate to grow wealth. You don't use real estate to get wealth,
Yeah, I think there's a lot of things that way. And being, kind of in our 30s, we start to see people like take that next career step. Like everybody who's like hustled their face off in their 20s for whatever, whatever their thing is, whether they were like, a broker selling buildings or whatever, learning the ropes of the real estate, or, software developer in the startup world, or, just software salesperson, or whatever. Like in the 30s, you start to see people where in the position where their money can work harder than they can, but they're still working hard and they're earning a ton. And it's kind of like, oh shit, like this snowball has hit escape velocity and is headed down this like amazing path. And there's people who, for whatever reason, are just like, oh, you're on a linear track. And like, that's going to probably stay that way pending some other like big breakout event. So yeah, getting those, like, what do you recommend for people who maybe they are in their 20s or whatever, and the systems that you need to build? I shouldn't say 20s, like anybody, I think, this is 10 years away, maybe at any point, like starting from zero, systems to go from like standing start to, some breakout point where their money can work harder than you can.
Yeah. Like talent stacking ultimately is the best way to start to get ahead, is take the thing you're best at and then combine it with a tailwind kind of macroeconomic thing happening, whether it's low interest rates or Web3, or, or you live in a town that's growing in population a lot, take something you're very good at that you can deliver. I mean, just in a small business sense, put yourself in the right place to deliver that and have it really be able to effectively capitalize on your skill, and then go from there. I was going back and forth the other day. I think having a very great technical skill, whether you're a HVAC technician or an accountant or a orthodontist, and then having a kind of business background where you understand the language of money, you understand how to kind of build a business model that takes you forward, and then being able to understand a foreign language on top of that, whether it be probably Mandarin or Spanish, or even like a language of management, beyond that, like being able to take the trade and then the leverage and then the kind of people leverage
Hmm.
is how I would think about really building a business from scratch today in 10 years. That, just any town in America, take like the biggest HVAC tech
Yeah.
business, and that's it, a killer business that anyone would want to own. And, or if not even the biggest, take the 5 most profitable, and they're good businesses, I promise you.
Yeah. What's that Munger line? Like, the best career advice. None of this is career advice. The best career advice is just go be the best plumber in Bemidji or whatever
Yeah,
some
yeah.
random
I
little
mean,
town is.
if you can go do that, but then you have to be able to ultimately use leverage. You have to be able to manage
Hmm.
people, manage
Manage
5
money.
trucks,
Yeah.
manage 10 trucks, manage your money,
Yep.
and that's the track to start the snowball. And in 10 years, you'll be there.
Yeah. Yeah. It happens quickly once you've got all those levers in front of you. What's the path? Maybe so you just because you sit at such a really interesting, like, I don't know how many clients you have, and you don't have to say, but I know that you have enough kind of a full room, put them together, and you know enough about all of the inside finances of all of these things. Like, are there businesses or industries that you get very envious of when you start to see inside like some of your clients' work?
Yeah, I mean, like, I think about, I get envious, or you're not supposed to be envious, but of people who have full-time autonomy. I mean, that's
Mhm.
the biggest superpower, is being able to um, just kind of make your schedule, which
Mhm.
is or the grass is always greener, you know what I mean?
Sure.
But in the professional services business, dealing with the IRS as your counterparty, and heavily deadline oriented, which we just passed this deadline, you do not, and then having employees and having kind of built a labor force around me, you don't get time autonomy, and you don't
Yeah.
really get, or I don't have time autonomy today. So having and I'm like a probably a secret introvert, and I just can like piddle with the best of them and think and write and just kind of come up with ideas. And so the time autonomy thing is really attractive. So you see writers and
Mhm.
creators and kind of these small businesses that do really, really, really amazing kind of revenue, and these people maintain their whole world. And I mean, that is awesome to me. I've never had the um I'm going to build the biggest business drive. I'd just like to have a good business that is profitable and good for my clients and good for my people.
Yeah. Yeah, though I think you may end up accidentally building a really big business. If I have anything to say about it, like there will be a line
Well,
out your door after this podcast. And
I always say that, I always go, oh, I never wanted to hire 20 people. And then I just go, the more I say, it's the secret or whatever. Like, the
yeah,
more you say, I don't want X, you're just inviting X into your life. The
yeah,
universe does not know that you don't want it. So
yeah. Well, you're gonna accidentally build the next creative planning and have own 100% of a $1 billion company in a few years, and then you'll be mad at me, which
yeah,
I
yeah,
hope it
I'll be
happens.
furious. Yeah.
Yes.
From your mouth. No, that's awesome. So that, yeah, and that is ultimately, I mean, you're the leverage guy, so you do have to be able to scale your message. And if you have a unique message and you have a unique way of scaling, either through people or through information or through platform, I mean, you can build a huge business. But the idea is building it, whether it's a small business or a big business, building a profitable business that creates value for the people who work for your business and the consumers of your business in the world, rather than just making the biggest business or making the most money and
Yeah. So
harming people.
let's yeah, yeah. No, Yeah, no, all positive everything.
All positive everything. Up
Yeah.
only.
Up. What I wonder if we can do a little like zoom in on the kind of 0 to 1 moment of like
Sure.
I'm a technician and a person who maybe doesn't have an entity set up yet, and like what are the first milestones? Because I've heard you say before, and I think it's incredibly true. Like my um, mindset totally changed when I incorporated for the first time, even though I've been doing stuff on the side for years. And a sort of an accidental theme of this show and previous interviews has been like, go get incorporated and uh, start to see your life change. And like, that's how you kind of get in the game. But nobody has really talked yet about the details of that, right? Like how do you pick an entity? How do you know it's the right time? When is the like, what are the benefits of it? Like, why should
Sure.
I care? Because it just looks like a bunch of fucking paperwork until you do it and kind of feel this click moment. So I know this is not like what you do,
Yeah,
but
yeah.
I also know that you know about it and certainly like the benefits of it.
Sure. So not financial advice, but by the way, not full
No
disclosure,
financial
nothing
advice.
I
Yeah.
say here, no financial advice.
We're just gonna loop a quiet like no not financial
No,
advice to a
not
beat and then
financial
just like
advice.
put it in the background of this whole thing. So yeah.
Perfect. So that, yeah, whenever you capture the 1 minute,
Yeah,
it's
like
just right in there.
yeah, audio watermark the whole thing with yeah.
So NFA, but so my story is I was working at BDO and I just started taking on moonlight work that really did not conflict with what I was doing there. And I felt true about that. And then, so I would do a person's taxes here or there, and they'd pay me money, and I'd just put it in my checking account.
It's like family, friends, like
Yeah,
yeah.
or just a person here or there that just was not a BDO client,
Mm-hmm.
and you know, and we can talk more about that because I don't think you should. I wouldn't suggest you do bad work at the beginning and think that that will lead you to doing good work at the end. Bad work does not scale into good work. So just know that. So let's put that there. Mistake number one. But beyond that, so there's a couple, there's many reasons to set up an LLC. There's liability protection. There's this what you're talking about, this metaphysical feeling you get when you're half joking, but it's true. I mean, there's something to making a start and saying what you are and saying what you want in the world, and then that's the only way to get it, as far as I know. But then beyond that, the biggest kind of financial incentive of why you would set up an LLC immediately has to do with self-employment tax, and self-employment tax is FICA, FUCA, Medicaid, Medicare, all of that junk that, the reason why if you're a teenager and you make $10 an hour and you work for the Cold Stone Creamery and you go work 10 hours, they don't send you $100 check in the mail, right? They pay $115 and you get $85, and then they start taking federal income taxes out of it. So all of that is employment taxes. And, that's how you get Social Security at the end of your life. There's a bunch of reasons why those exist. We don't have to litigate that right now, but beyond that, the benefit of setting up your own LLC is that you can become an S corp, and you can the financial kind of level 0 benefit is you can become an S corp, and then you can start paying yourself a salary. And the difference between the net income your S corp pays tax on, or your S corp passes through to you, and the salary you pay yourself, actually passes through without being subject to self-employment taxes. So in the simple model, you go start doing something on the side and you're making $15,000 a month and you make $180,000 and you go have 50,000 of expenses. Now you're down to 130. Well, you don't have to pay $21,000 on that 130. You can set a salary for yourself at $60,000 or $75,000. And the difference between the 75 and the 130 passes through without being subject to that 15%. So, 130 minus 75, 55, 15%, call it $7,000, $8,000. So it's meaningful.
Mm-hmm.
But the other thing is, if you have a full-time job where you're getting a W-2 and your W-2 is $160,000, then you're already kind of maxing out all of that self-employment tax. The only thing you would save is Medicare tax. So that's a whole kind of road I just took you down to say it may be meaningful, it may be meaningless. The key with the salary is it has to be the kind of appropriate salary you would pay somebody else to do the work you're doing. So like I have a bunch of clients that are psychologists, and psychologists are easy because they can go work for the Menninger clinic or, and they're a PhD psychologist and they make $72,000, but then they go out on their own and they're all of a sudden grossing $250 an hour and their gross income is $280,000.
Wow.
Well, we kind of know what that salary should be. We have a framework.
There's a market rate for it.
To
Yeah.
set that.
Yeah.
So going back to kind of at the beginning, I was just doing this work on the side. I never really set up an LLC until I had made the decision that I was going to leave. And so the year I decided I'm going to go do something, I set up an LLC and, made, I think my first S Corp tax return had like less than $10,000 of income. Or of gross income in it, so.
How did you decide to go out on your own?
I did not like work. I did not thrive in the corporate setting. I would say,
Shocking.
Yeah. So, I knew that I don't know. I had hubris or some kind of idea that it would be better if I just ran the whole thing. And, that's probably been a story of my life but beyond that, just kind of, I didn't like the work. I didn't like I liked a lot of the people I worked with. I still talk to a lot of people I worked with and the clients were good. I just didn't like the whole structure. I just didn't think we were, I don't know. I just, the whole like public accounting world is just a grind. The whole thing's a grind and it's not fun and it's not particularly impactful, especially at lower levels. And so by the time I left, I had these two friends who were buying a building, and one of them was my college roommate, the other one was his partner. They're buying this building. I helped them set up their books. I helped them kind of get the whole project up and running. And they say, oh, well, what would it be to do a tax return? And I say, well, this much. And then beyond that, one of the guys was the general partner of a bunch of other shopping centers and some restaurants and had a fairly significant book of business that he basically offered me to work on. Another accounting firm in town was doing the books there and was doing the taxes. Their partner had left. And so it just kind of fell into my lap. It was $40,000 a year of work. And I had money saved. I had low cost of living. My mortgage wasn't big and I didn't have kids, and I just took the jump. I brought it to, I was married, I'm still married, but I was married at that time. And I went to my wife and said, hey, I'm thinking about doing this. And she said, let's go. So that was my big, I knew that if it didn't work, I could get another job and a better job. So that was my foundation.
Yeah, your mentor was kind of right about that. Like accounting, accounting and law are both that kind of like low variance on the floor. Like you can always get a job for, you know, $80,000 a year.
Yeah.
No matter how shitty the job is, like you're never going to starve. But there's also upside where, you know, because you have this hard skill, you can end up on boards or starting your own firm or whatever, and find your way into these kind of incredible places.
Yeah, and you get the view in from the inside, even when you're not an insider, and even when you're not kind of there's no reason that you're 26 and you should be sitting in this room with all these people talking about in the crucial conversation, but you're there and you get the opportunity to stand out and learn and make a difference. And that's why, you know, even I'm grateful to that whole pressure cooker grind of public accounting, because I mean, there's no other way to learn a craft than to just sit there and work 70 hours a week for 5 years and
reps.
So you don't get that many chances to build that kind of foundational knowledge, where then you can go learn other things off of that framework that you built. But at some time you just have to learn, you just have to grind it, you know?
Okay, so before we leave the like 0 to 1 sort of like incorporation thing, is there like a break even spot where it's like, do not incorporate until you're at X yearly earnings or side hustle of some size? Or
I'd say under like, well, especially if you're making there's kind of different rules around this, but if you make 150 grand at your W-2, I wouldn't set one up until you had 20 to 50. And if you're out on your own, there may be reasons that you'd want to set it up before that point. But even then, that's a good starting point. And then going up from there. I mean, if you know in your heart that you're going to be at 250 in 3 years, then just do it. You know, and there's a bunch of, there's First Base, there's Stripe Atlas, you know, think about what state you live in and what the benefits are, call a lawyer, you know. But yeah, I would.
Yeah, I called the lawyer who asked like 3 questions and was like, it was like, if this, then it's like, oh, okay, great, easy.
Yeah, and then, you know, do you want, the other thing I would tell people is just go set up an LLC, and there's nothing that you can do. You know, the IRS is pretty forgiving about entity formation and picking your classification. So there's nothing you can do that's generally so damaging in the first few months that you can't go back and correct it by the time you have to file a tax return. But
cool.
You know.
Okay, so if you incorporate at like 50K, there's another kind of like big milestone where like if you think you're going to end up at a $20 million net worth when you die, like definitely work with a planner. Are there any other like milestones or numbers or anything where like either your strategy has to change or your team definitely should change, like the amount of support that you have?
I mean, I think there's points that, like when you have children, it's really when you get married, when you have these big, when you join a business partnership or a personal partnership, or you have kids, or I mean, those are really kind of crucial moments where you and your partners have to decide. And it's always the morbid, when this all blows up, do we have the buy-sell agreement? Do we have the agreement of how we're going to dissolve this? When me and my wife you know, if you and your spouse both go at once, who's going to care for your children? What's the money going to look like? Who's going to control the money? Who's going to, you know, you
Yeah.
have to make all those decisions. And it helps to have professionals in your life who have a bunch of reps at making those decisions and a bunch of viewpoints, and can kind of see behind the corner that you can't exactly see, because and just in terms of having somebody who's going to go, hey, you have car insurance, you have property casualty insurance, you have rent insurance or homeowners insurance, you're paying all this money for all this stuff. It's worth bringing people into your life to help you. You know, you may or may not have disability insurance, you may or may not have adequate life insurance. Like just, you're paying all this money for all this insurance, which is, who knows exactly what you're getting. It's worth
Yeah.
making sure that you have the correct kind of setup for what you need, because really generally who you're buying that stuff are commission salespeople. So
Yeah.
there's
And
a
it's
case
designed
where,
to be fucking confusing.
yeah, absolutely. No one really sets it up and goes this, and then you get into the same thing in investments, and who, you know, who do you buy them from? What are they selling you? What are the kind of risks? What are the drawbacks? What are the attributes of all these products? And yeah, it helps to have somebody on your side while you do that, rather than just not know your whole life exactly what you're buying.
Yeah, sounds like a terrible plan.
Yeah.
Yeah. And also, like, the cost of some of these things is, you know, you have a really unique business and business model, which I want to go into, but like, there are definitely like people that you can just call for $100 an hour and have a conversation that will save you $2,000 a year.
Yeah.
Which, like, is it your estimation actually that like a good accountant basically like pays for themselves?
Well, so accountants pay for themselves in several ways. They save you time, which your time's valuable. They save you stress, which your stress is very valuable. They save you headaches because you don't screw it up and have to redo it potentially. They save you money, hopefully, because you optimize there. So, and then you kind of have to have one. So you then are deciding from the baseline, or you don't have to have one, but you get to a financial kind of point where you have to have one, and then you have to decide what is the difference between, if I have to have an accountant, which accountant am I going to have? And so, you know, so that's the kind of value proposition of accounting or financial planning, or having an advisor. Kind of, you're supposed to save, and because you're just working with or a lawyer for that matter, you're working with a pro, and they're going to kind of save you before you hit the wall. And then, you know, beyond that, when you do hit the wall, they'll help you out of your jam, you know? So
how this feels like such a, partly because it's all like kind of confusing and jargony, and it's hard to it's really hard for people to evaluate and understand, like, you know, this person is ostensibly on my team or supposed to be on my team, but it's hard to understand. And every accountant and planner is a little different in their, either their risk bias or their philosophy or their practice or whatever. Like, how do you know, or how should someone understand whether they have like a good accountant, a good financial planner, knowing that like that good is going to be a little subjective and different for everybody, but how do they find that alignment?
Yeah. And I think that's a conversation everyone's going to have. Risk bias is a great kind of way to frame it. And I get to honestly tell people, hey, if I'm telling you not to do this, don't do this, because you don't want the most like wild, risky accountant there. That's not the job. Most accountants don't think quite exactly how I think in terms of measuring risk, but everyone says, oh, I'm always bringing ideas to my accountant. My accountant's never bringing me ideas. And it's really based on incentive structure of you and your accountant. Is your accountant like, do they need, a lot of accountants just don't need the headache. And I've experienced this too. You bring someone a great idea, but it takes some steps and some thinking and some stuff to execute. Like I've had a client who, she would do really well to have an S corp, but she just doesn't want one. And then you go, what am I going to do? I'm going to make her get one, or because then when anything breaks or anything kind of doesn't go perfectly to plan, she basically gets to decide, hey, I know that having an S corp would save me 10 grand a year. It's not worth it. And I get to respect that, I guess. But going back to it should be an upfront conversation. If you're going to go hire an accountant, you have to say, hey, between you and your colleagues, do you think you're proactive, or do you think you're willing to be creative about how to structure things to save tax, or what is your bias in terms of how much do you think about things like that? I mean, it's also one of those, it's just how the whole thing's set up, that if someone's doing your taxes every year, it's kind of by definition reactionary, and it's kind of built into the business model, and it's built into the arrangement. I mean, you'd probably do well to go, how much do I need to pay you to, or even then, so like I had this IT guy, and I'm like pretty knowledgeable about computers and networking and how to set, I figured out how to do all that when I set up my business. But then I like got some ubiquity switch that I didn't know how to set up. So I got this guy off of Upwork. He's like the smartest guy in the world, and I'm making his job harder because I'm like the informed consumer. And he goes, wait, you have this server and you have the switch and you have this VP. Like, why do you have all this shit? What do we do with all this? And so he's there kind of fixing it. But and he's the smartest guy in the world. And I know that, but I can't figure out how to motivate him to be proactive. There's just no way to do it. I've tried 10 times, and eventually I just had to get a new guy because it's just not what he wants to do. It's just not how he's oriented. And that I can't go, hey, go in every month and look at this and look at that and look at that and make sure everything's copacetic. Like, he just won't do it. There's no, so you have to just know how, I say all that to say, you have to be able to kind of in the interview go, hey, I need your attention 1 hour a quarter. Can we commit to that? That's a drop dead kind of non-negotiable for me. We need to sit down 1 hour every quarter, and you need to prepare for 1 hour before that. And we need to have a thoughtful conversation 4 times a year. Can we do that? And what would that cost?
Yeah.
That would be a good way to kind of get into, and then if you go 3 quarters and there's no value, well, maybe your situation is not complicated enough to, value gets easier as the situation gets more complicated and the numbers get bigger, but
sure. Yeah, that was, I mean, I think that one of many things that attracted me to you when we first started talking was, there's definitely like part of your personal philosophy that I'm attracted to. There's also part of like how you structure your business that I'm attracted to, which is like the, I've heard you describe, I was kind of like, look, I need a personal CFO. And I've heard you describe it other places as like a fractional family office, which to me, like by definition is like aligned and proactive. And I was like, I don't have time to spend my whole life like researching the stuff that you already expect to know, but like you have to learn my situation enough to say like, hey, like you are missing an opportunity here. And like, I'm the kind of person who's excited to go take that opportunity, but like being proactive about matching like opportunities to my situation, like I think has to come from the professional who already has all this knowledge.
Yeah.
And it is like, that's a huge amount of value over the long run. If you can, totally change, if you can change the effective, tax rate or the compounding rate or something of like an entrepreneur's net worth for their whole lives, that's massively valuable.
Yeah, I totally agree. And it's also it's a difficult, I mean, I've been kind of assimilating this financial planning service into my office over the last year, and it's getting better and better and better, and it's getting easier, and we're doing more of these, and I think it's a great product, but there's just so much information. I'm sure that when you go into kind of, hey, we're going to give you this whole wide aperture view of your life, and that sounds great, but then it's like, okay, where is my auto insurance, and where, then it's like getting a root canal, and it's not a fun experience, but I've gotten better about selling how bad it is up front, and so you get,
I mean, yeah, it's a little painful, but I also like, it's like going to the gym, it's like the reps are painful, but like the results are beautiful. And I love, I love grinding through some of that, knowing like what's on the other side, and that like some of that hard work has incredible payoffs. But yeah, it's a ton of work for you to synthesize like the bookkeeping and the tax and the insurance and the financial planning and the answer to every question is it depends. You're like, shit, all right, well, let me go compile all of the variables about this particular person's life, and then readjust all my recommendations. Like, that shit's hard work.
And it doesn't it's hard to scale the model too, in that term of, I was talking to somebody a couple of weeks ago and describing kind of what we do, and he was like, like when I did all that stuff, about 10 people did it. And you just go, well, we do have 3 offices built into my office, which for better or worse, and they all have to synchronize in a beautiful dance. And then beyond that, we have to have partners outside of my office. And then I just have to act as, or we have to act as kind of quarterback, follow up, kind of the center. I mean, I can't know everything. I can't. I think I'm not an attorney, not a medical doctor, so I can't like really. I have a limit as to where my knowledge goes, but then I'm charged with going, hey, I mean, that's why I don't have investments. I could partner with Altruist and start running index stuff, but then it's one more thing to track, it's one more thing to administer. And I would just hire or partner with somebody who was so focused on that they were amazing at that. And even it's about having good attorneys as partners for estate and trust and all of that stuff, and just really kind of knowing the edge of my knowledge, and then trying to bring in experts at that point. So.
Yeah. And you got clients all over the country too.
Sure.
So there's local knowledge that comes into it as well, right? Yeah. It's a very it'll be interesting to see how you scale, because there's different directions you can go, right? Like you can go the creative planning route and just like build a huge planning and accounting firm. You can also go towards productizing some of these. You can go towards specialization and just increasing prices, and
so
the number
I've
of clients
tried to
fixed and stuff.
Go up market, because I've realized that up market, meaning this 20 to 250 million person, if they haven't, first of all, there's a lot of them in the market beyond what you would expect, and if they haven't done planning, it's so rewarding because there's just so much meat on the bone right there. And then it just kind of but then again, I know it's tough to know that like there's so many people that need, I mean, I'm not, curing cancer, but there's so many people that need financial planning. There's so many people I would love to work with, but I'm limited in my time and capacity, and trying to scale out the kind of systems we use and the programs we use and the ideas we use, and then trying to delegate and partner and bring people on. It's just a lot all happening at once. So I'm trying to just kind of slow down and know that I don't have to do all this in the next 3 years. I don't have to be Peter Maluk. I can just be me, and however long that takes.
Yeah, we like you just the way you are, Mitchell.
Thank you.
Little Mr. Rogers situation for everybody. So is there a
Daniel Tiger? That's Daniel Tiger in my life. But
yeah, did you know? So Daniel Tiger is like the descendant, like, I don't know, conceptual descendant of Mr. Rogers. I'm reading a book about Mr. Rogers right now. It's very interesting. He's what a like hero. Not all heroes wear capes.
Biography thing was amazing. Did you watch that on Netflix or whatever that was?
I didn't see the documentary, but I saw the movie, and it was savage. I mean, like the emotional shell shock in the men's room after seeing that movie of just a bunch of guys who like thought they were going to go. Everybody was just like red-eyed and blinking a lot and like not making eye contact. Just like, I thought that was going to be a documentary. Yeah,
you already don't want to make eye contact in the men's room, but it was
next extra level. Like, it's just like 6 guys all in this AMC bathroom, like quietly crying from a Mr. Rogers movie and recovering. It was very, very weird.
Love it.
But yeah, truly amazing movie, amazing guy, great book. Like, just maybe the best communicator, or like top 10 all-time communicators. Super, super like thoughtful about every single word and pace and phrase, and amazing. Okay, back to money. Sorry. What are maybe some of the things that people underestimate or overestimate in terms of effectiveness, that like somebody comes and asks you and you're like, shut up about that, that's not important?
That's a good question. What do people get hung up early on about trying to, the downfall of the LLC setup is that, and the reason I say 50 grand is because in order to make 50 grand, you have to have found a product market fit generally before you're worrying about how the organization runs. People get very tied up in, and it's tough because especially if you're going to have a partner, you have to understand the mechanics of a partnership, win, lose, or draw before you build the business. But if you're starting your own passion project and you're getting in your way about what's going to happen when you make all that money, a lot of it is just that whole fear, and a lot of it's just a whole bunch of neurosis that's falling into your life, and I have no time for it. Or so literally I tell people, I'm like, go get X clients, or go find this metric of X, or go sell Y things, or go do whatever, and then call me, because I and then it's awesome when people actually do it and then come back, because you're just having a totally different conversation than somebody, who's all weird and doesn't know whether their idea is going to make it or not.
Yeah, over optimizing for something that's not even making money yet. It's like, go make money until the amount of money you have is an inconvenience, and then come back and talk to me.
Yeah. So that's the big kind of, I don't know. I forget whether it's over or underrated, but then the other side of that is, people who, have net worths in the high 8 figures and don't have a will. And those people are out there, who just have totally under optimized, where you go, if you die today, you're leaving such a disorganized kind of, or frankly, even if you just live 30 more years, like there are things you can do today. And again, you've hit the snowball to this level where you have a problem and it's getting bigger and it's not going to get better.
Yeah.
It's like diabetes or something. And it's
Yeah.
money's good, but money can create a problem. And if it's not managed, it doesn't, the way compounding works, your problem gets worse and worse as your money compounds. And so yeah.
So let's like go into the some of those problems. And I think a lot of those, I mean, I know a lot of those come around the tax code specifically, not all. But I think that's something that people tend to glaze over as soon as like the topic comes up.
Sure.
So let's I don't know, the combination of like make tax sexy by making it like terrifying or really appealing, and how much of a factor is tax efficiency like over the long run of wealth building? Is it it's got to be the top three? Is it obviously one or two?
Well, look at top marginal tax rates, call it 30 to 40%. And you know how people talk about if you pay a 1% fee versus a half. I mean, look at Bogleheads and how they talk about a 1% portfolio drag over time, and then take that and call it 40.
Jeez.
And see where that takes your money. So, I mean, yeah, if you're willing to move to Puerto Rico and you have a great business that, and you're a natural gas trader, and you can basically take tax off the table and go compound tax free for 10 years, what can you do that other people can't do? So tax is humongous in that way, in that if you cut it out, everyone gets to infinity in 10 years, and then, but but then even if you can shave off at the margins and optimize, and I mean, I have people who, when they showed up I have one lady who, like, when she showed up, we immediately did structuring and kind of changes in her program where she was able to basically cut her tax bill in half. She was paying $50,000 and we cut it down to like $25,000. And I mean, that's a bunch of money. That's a meaningful amount of money. And she's been my client now for 6 years probably. So, I mean, we've saved, this whole thing, and we've been able to put that into an IRA, and she's been able to, or into a 401k, and she's been able to kind of save money that way. And the market's grown, and it's been this meaningful,
that's a life-changing.
And that's 6 years. And if she does that for the next 25 years, theoretically, or if she had done that for the last 25 years at least, that would have been a life-changing amount of money, certainly.
Yeah. One of the things, I mean, kind of on the topic of the lifetime effective tax rate, is I'm always curious, like, what if you could look at a pie chart of all of the places that people spent money on over the whole course of their lives, like, how much do you actually spend on your education, your kids' education, your housing, your food, your whatever. Like, when you actually look at it, I bet in that framework that tax is the biggest expense over the whole course of your life, because you're paying it every single year, hell or high water, like probably 20 at least % off the top. So yeah, those gains can become incredibly meaningful, or any efficiencies there.
Yeah, there's a guy in Houston, his name's Cody Garrett. He's the planner. Measure Twice Money is his name, and I like him a lot. And he's a young guy, and he just thinks differently about planning, and he runs his own kind of fee-only planning business as well. But he he had a tweet the other day called Budgeting 2.0. List your expense categories sorted by dollar amount, and then basically list them by the subjective value they provide to you, and kind of look at the misalignment in what you're spending money on and what it provides you in value. And the first guy goes, taxes. Like, taxes, hands down. You spend more, I mean, we just got done with October 15th, and people are paying millions of dollars of taxes out there. And I mean, we don't have to go fully into my anarchist libertarian soapbox rant, but there's just the way money gets spent and money gets printed and money gets manufactured. A lot of it doesn't align with everybody's values, and you don't have a choice. And you pay tax at the barrel of a gun ultimately. And so to the extent you can build your life and your systems to minimize tax, some people feel like it's the right thing to do for themselves. So
yeah, I'm glad you said it, because I didn't want to put those words in your mouth. But yeah, I'll let you do it. So like when we first talked, I was attracted to both, like the personal philosophy and the business philosophy. Like what breaks down for you as far as like what percentage of your clients are kind of with you because you have the like personal philosophy and the like relatively high risk tolerance for like, like I heard other people, I think Nick Huber was like, why do most accountants work for the IRS? And like you are very firmly on the, like, you unambiguously work for the client, not for the IRS. Though like everything is very legal, and you got to like understand all of where those things, and like I have a very healthy fear and respect for the IRS, and appreciation frankly for like a lot of what we buy with our tax dollars. But that doesn't mean I don't want to be efficient about how we approach it. Like how many I guess, is that like a real draw for people to reach out to you kind of?
I think people just talk to me, and I've heard more than 10 times, like, you're my guy, or just, I have a different conversation with a lot of people than they've ever had with an accountant. And again, like, I get it. And maybe they're right. I don't think they're like, maybe everyone who's doing it, like I went to Reconvene a couple of weeks ago.
Moses conference, right?
Moses conference.
Yeah, hell yeah. Love Moses.
Shout
Moses
out
Kagan.
Moses. Yeah. Moses Kagan, at Moses Kagan, the real estate Twitter godfather. And I don't think he likes it when you call him that, but no, it was a fantastic experience. And I noticed, like, there's people who are have the biggest businesses, or my observation was, like, they are price takers. Like, they are allocating capital in current market conditions the best way they can, and taking the price the market gives, and then trying to run them in a professional kind of institutional quality. And then there are people who have smaller businesses who are really like trying to create alpha, but you can only create alpha it's hard to create alpha at scale. It's simpler to take price. And even our buddy Bogle, at some point you just have to take price, and you have to be in the market, and you have to be in the game, and you have to look at the long run of the market, because everyone who was trying to create alpha in 2014 and missed out on the people who were taking price in 2014, because the market has run up so much that the price takers were able to do so many more deals and put so much more leverage out there that ultimately it worked out for them. Now, so going back to me and what this has to do with the IRS is, like, I probably make my business harder than it needs to be, and I probably make my life harder than it needs to be, because I'm an engineer and I'm an optimizer, and I'm just trying to understand mechanically how to
Mhm.
do the very kind of most efficient thing I can do. And that takes a lot of work. Like there are, like you said, every answer is it depends. Everything is kind of this balancing act. And so um, I don't think the accountants who aren't creative or lazy, I just think they're not creative, and I think they're smart because they're just you can build
Yeah.
a much bigger business if you focus on less variables, because you can really just get in there
Mhm.
and hit the button. That's why niching down can help a lot too, is because you can really, like, if you have a practice full of dentists and
Yeah.
you only work with dental offices, the kind
Yeah.
of,
You're running a, you know,
yeah,
assembly line. Yeah.
you're running an assembly line. And so, but that's just not what I'm doing. I'm doing
Yeah.
a bigger kind of more thoughtful thing that I enjoy more, but
Yeah.
and I like having the conversation of really how to optimize your taxes. And again, I don't think your taxes are your morality. I think the law is the law, and you want to obviously be within the law, and obviously pay the tax you owe, but figure out things that are right out there, right in front of you, that eh, you know you get to decide. If you're in real estate and you go sell a big portfolio this year, you get to decide, am I going to pay the tax? Am I going to 1031? Am I going to go buy something else? Am I going to
Mhm.
start up my next, there's so many decisions you get, and it's almost like thermodynamics. Like the heat all happens at once, and you want to, like, pour the pour the cold water on right then. A lot of tax is just, I'm living my life. I'm making the decisions I want to make. I'm running the business I want to run. And how do I couple taxable events with the next thing? Or how do I just make sure I don't get my head chopped off in 1 year
Yeah.
because I didn't think of the one thing that I could have, that really
Yeah.
could have changed the picture,
Yeah, absolutely. And I think that's part of what makes you very good at this is I think there's a big difference between like somebody who's like, is it done and is it done correctly? Like yes or no. And I think a lot of almost all accountants, like I actually think it's a well-defined profession full of smart, hardworking people. And like most of them will do your taxes legally and accurately, and that's wonderful. And they'll say, like, you're good enough. Like it's done. Um, and my appetite is very much like, you can give me more work to do. You can give me like, I want to optimize, and I want someone who's not just going to say like good enough, but like let's compound our face off for the rest of our lives. And like
Yeah,
not only is your firm oriented to that, I think, well, but also like that's your personal philosophy and path, and like we jive on that a lot, I think,
sure.
which like helps, right? Like you are also building a business, you are also like investing your capital the same way your clients are investing theirs, and I think in a lot of cases, and ended up kind of in partnerships with some of them too. um but I wonder, like, kind of on that thread, the old like doctors know enough to know that like they don't want CPR, um
Yeah,
and like have do not resuscitate tags and stuff. Like,
yeah, yeah.
is there stuff, are there places where your personal actions differ from what you recommend for clients, or from kind of best practices?
Yeah, I mean, the big one lately is that we'll get on is crypto and all that, which it has just been a product of Twitter. I mean, I think what it's like the Bob Dylan quote: in order to live outside the law, you have to be honest. And so
Mhm.
I think, like, everyone needs to build if the world goes on as normal, and then if the world ends, like, you have to have both plans. And
Yeah.
if you have to pick a plan, I think you pick the plan that we get a soft landing from all this money printing. The world, everyone, this kind of like thing, everything keeps going on and we just keep going. And I mean, they have that quote like, pessimists sound smart and optimists get rich. And I believe that. I mean, I think overall, if you're not, if you're building your whole life like the world's going to fall apart every day, you're going to lose out on the trend of the world getting better and better and better, which has happened for the last,
70 years,
7,000 years. Yeah. You know what I mean? Like, I mean,
yeah.
So I would hope, but then again, we're in this kind of weird time and we have weird policy and I don't understand exactly how all this works. And my big complaint is I go on and I go, hey, what's this M2 chart mean? And everyone's like, you don't understand, bro. You're just an accountant. This is financial plumbing or whatever that, like, I just don't get it. It really, I'm a simple guy, debits, credits, like show me how it all works. And yeah, the printing and what inflation that seems to be happening and a lot of things in the world don't quite jive. I hope we can kind of get it back on track. But beyond that, to say, I just don't know that the next 40 years of the public equities market is going to behave exactly the way the last 40 years did. Mm-hmm. And so then if you believe that, or if you don't believe that, I guess, what do you do? Or how do you allocate your money? And so then, like Tim Ferriss once said, people don't even have like 10 gallons of water in their house.
Yeah.
It's like, couldn't we just have 10 gallons? What does it take to warehouse 10 gallons of water? We have the space.
Yeah.
Water's free. It's coming out of the tap right now. So why don't we just, and then sure enough, we're in Houston and we have this freeze in February.
Yeah.
And I'm the moron with water in my garage and it kind of works out, So, we are just running very, very, this whole just-in-time production thing has worked and it's been good, but I think we need to be a little bit more prepared than just. I think
it's fragile. We've seen more of it, I think, than anywhere else in my lifetime in the last year or two.
So my grandparents right now are selling their house and moving into like an assisted living facility. They're in their 90s. Their money guys going, oh, great, we're going to sell the house. What are we going to do with all this cash? And I'm like, why would you not just keep the next 5 years of cash you need in a checking account so that you don't, or you're 90, like you don't have to worry about money. Why are we going to go chase the stock market right now, or now of all times or ever? And so I think and I would tell everyone the great thing about the way I've set up my business is I get to help my clients meet their goals and help my clients make their own decisions. And a lot of people, a lot of my clients are far richer than me and have gotten there because they understand the world in a way that I don't understand the world. And I don't have to tell them. A lot of my clients come to me, and before they come to me, they've had an experience with somebody in money who tells them how stupid they are and how reckless they are to organize their money the way they do, and how they need to sell everything they own and give up custody of all their money to said financial advisor in order to make 8% returns or however that looks.
So somebody negged him to try to get, the 1% management fee, asset management fee.
And I don't know that it's even like that cut. People don't know even what they're doing in life. But I go, hey man, you made 80 million bucks and you're 37. I'm not going to tell you how to make money. I mean, I'll tell you, I can tell you what I would do.
Yeah.
If I were in your shoes and I can tell you how to try to set this up, if you tell me where you want to be in 30 years, I can try to tell you how to get there. But so I try to give my, all that to say, I try to give my clients advice based on what I would do. And I try to, again, I try to work with these kind of odd ducks who live outside of the normal. I have a job and I make more money than I spend, and I save money, and how do I best invest my savings? A lot of these people have concentrated wealth in odd investments.
And those are the
I
people
try
that,
to help them on the margins of not blowing up.
and those are the people that really need you, right?
Yeah.
And when you say like odd investments, you usually mean like private, largish, but I mean small to medium private businesses, real estate. Just do like stock options fit into that or not really?
Certainly, yeah.
Okay.
I mean, if you are a early employee of a company and you make $237,000 a year and you have $30 million of stock options, how do you navigate the next 5 years of your life?
Yeah.
Or how do you, that's
Very meaningful. Yeah.
That's just the question that I'm excited to answer, as opposed to I'm an in it on it. Or, I mean, I work with people who just make more money than they spend and save their money, and that's fine too. But I just have fun with the odd ducks.
We odd ducks fly together, or walk or moonwalk or whatever odd ducks do. Yeah. Okay, so God, there's so much stuff that I'm just not going to get to. We'll have to do this again because I feel like so much of what you know is so valuable. Over months. Yeah, we'll do it. So let's before we lose the thread, go into a little bit of Web3 and crypto, because I do think, especially hinging off technology, and this is a thing that a lot of like TradFi does not get, or refuses to get, or is just overwhelmed and doesn't want to learn about right now. And a ton of money is already being made there, is going to be made there. It has really interesting implications, I think, for all of the like accounting and the stock market and a lot of the stuff that I've already talked about today. But I don't know. I mean, you're as deep down the rabbit hole as I am, probably, maybe more.
I don't. Yeah, we have these conversations, and we're like, are we bad influences?
We for sure are. I keep scheduling meetings with you to like talk about tax planning and like setting up, retirement accounts, and then we end up talking about like apes and just absolute Ponzi's for an hour, and then we schedule another meeting and do the exact same thing again.
Yeah. But so I don't, obviously I don't, I've been, same story as everybody. I first heard about crypto or Bitcoin, and the real time I really remember focusing on it was when Mt. Gox blew up, and it had gone to $400 or whatever. And I thought, oh, should I buy this? And then it was one of those, and I've had this experience a lot of times in crypto where the kind of how do I buy this has been such a drag that I just don't do it. And then when Tom Osman bought his Etherrock and was talking about it, I was like, this Etherrock thing is going to be the real deal. And then I was like, well, it's 15 ETH. I mean, that's pretty expensive. And then I was on my phone and couldn't get MetaMask to connect, and I just like passed on it. And then 300 ETH later.
I think he ended up flipping that thing for like $1 million.
Yep.
Wild.
And so, but then I've been at the right place at the right time some other times. But zooming out from that, it's just like, I bought Bitcoin in, I think 2017, rode that whole bubble all the way up, rode it all the way back down, still hold that
still stuff. Riding. Yeah.
Still riding. And so, it's not, again, not financial advice, not the whole keep running the loop. But I don't. At some point, the way I see it is like somebody's going to capitulate, and I think we're already seeing it in real time. Is the idea that this is all magical internet, or the idea that this is all Beanie Babies on one side, which was a legitimate idea versus they're building rails and systems and kind of infrastructure for the new age of money on the other side, and people are investing billions of dollars. And who's going to give up first? The people who said this is all a scam at $3,000 when the thing's $100,000, or the people who have put $1 billion of some public teacher's pension fund into it. And I think the kind of the Lindy gets stronger and stronger as, and this has happened even in the last year, is all of the venture capitalists and all of the kind of public sentiment of the kind of smart internet money really focusing on this thing.
And developers develop like all of which tends to be a leading indicator of value, pretty much 1-to-1 or 1-to-5, right? Like,
yeah. And so then let's say this whole thing pump, and then crash, and then we have a long bear market, whether it's a year or 8 months or 5. I don't think we're going to have 4 more years, because it just the way
how fast everything's happening.
And I don't think Bitcoin's going to 10x very quickly because of how big it is. I mean, you start to see that like price is discovered on the margin of supply and demand. And as these markets get bigger and bigger and bigger, they can't go up as fast. So then, I mean, the whole way policy and money and loans and stimulus and all this stuff has worked, the past 10 years, but even take the past 18 months, they've really rewarded people who have taken the biggest kind of gamble or taken the most risk. And so all the stuff at the riskiest end of all of this has done the best. But I don't think that's sustainable either. But I can talk about my kind of like thoughts around all this forever, but I would just say that I don't think this is a fad. I think I was listening to a podcast where I was listening to Joe Rogan and Bert Kreischer, and they were talking about MySpace. And they were talking about how what's his name, the comedian, the big MySpace guy who was really
like, was it like Dane Cook or something?
Dane Cook, yeah. They were talking about Dane Cook and how Dane Cook like broke out on MySpace, and they were having this whole conversation, and they were really talking about crypto. Is they were talking about, I didn't understand it, and Dane was telling me, hey, go on and just start posting and start working, and you'll get a zillion fans and it'll help your career. And I was saying, what are you talking about, Dane?
This newfangled bullshit.
This newfangled MySpace thing. And that's what crypto looks like to me, is a community and a network and a system that is very flat right now. And people who got into NFTs at the beginning of the summer made 5 million bucks who
Yeah.
are, who
Yeah.
are 14.
And it's
So
easy to look at just that and be dismissive of it.
yeah,
But in the same way that early internet was just like, was bullshit, like the $1 million homepage or whatever. It's like,
yeah,
oh, that's dumb. Or even Twitter in the beginning was like, posting breakfast. It's like nobody knows
yeah.
what to do with it when it first comes
You still
out. But
post the
but
best sandwiches, by
I
the
do
way.
still post the best sandwiches. Yes, I've evolved from breakfast to lunch, and yeah,
Lunch.
over 10 years. So
But
one of the things people even like, I think I was talking about this with Andrew Finn, not like off the podcast, but he's like, I get crypto, I'm invested in it, I'm terrified to do anything with it because I don't understand the tax implications of it. And I saw this amazing joke on Twitter of somebody who like called their accountant and was like, so I bought some ETH and then I YOLO'd into a Ponzi and then I flipped it for a squiggle NFT. And now I'm yield farming and I've got $4 million in USDC in Binance. Help me pay my taxes. And the accountant just like hangs up, like,
hangs up the
like,
phone. Exactly.
no, thank you. This is not my problem. Not worth it. So like, should people, I don't know, how do you see the intersection of those two things?
Yeah, I think that the kind of we're watching we're watching Square and Stripe hiring crypto developers going all the way back to, from your bank account to the edge of crypto. And then we're watching all the crypto companies trying to kind of roll back into TradFi. They will meet in the middle.
Yeah.
It will make a lot of sense out of all these issues that are happening of kind of on-chain trades and what does my tax position look like? But right now, I mean, so shout out to Jason Hitchcock, who I met after I listened to him on your podcast. He's just the most interesting, smart, sweet guy. But beyond that, like, he's implementing these strategies, and I start to research them and look at them, and then take some of my own money and implement those. And like, my tax situation has gotten overly complex where all of my stuff's no longer in the same place. I have to go to these 4 places. And so like, the ultimately technology will fix this because it's all out there. It just all kind of needs to be sewn together. We're one kind of spreadsheet away from taking it all in. But I tell people, first of all, don't get so complicated that you can't track it today, because you
need to track it. Yeah.
You need to track it. You need to be compliant. Don't get so complicated that you do things you don't understand, where you risk money that, first of all, don't put $1 in crypto you can't afford to lose. But probably, I mean, the ideal kind of crypto evolution to me is that you put some chunk of your money in because you have conviction. And then as you go down into kind of smaller, riskier, but bets that have more upside in companies and protocols that you believe in and people you believe in, that will grow and grow and grow and start to, or my experiences have been that has grown and grown and started to become a meaningful weight in my financial picture. And then you have a new, what do I do with this? Am I going to rebalance? Am I going to start selling crypto and going back into traditional, into the market or into other stuff? And you get to think about that. But then, yeah, like you said, the Ponzi into the yield farm, into the squiggle, into the into the staking, into the liquidity pool is really, the more and more of this stuff you do, you're creating complexity in your accounting system around crypto. The good news is it's all on chain. It all exists. It's all public, frankly. So report it all, file your taxes. They're going to figure all this out, if they haven't already. But then beyond that, I mean, they have Coinly, they have Token Tax, they have a lot of kind of reputable websites that you can attach your public wallet address to, and it will start to figure it out. And then find an accountant who understands crypto and yeah, doesn't hang up on you when you ask them question. It's just, to me, I don't like the professional service thing of being dismissive of your clients who have explored this new idea or made a lot of money exploring a new idea. To me, it's crazy, but it's out there. So
yeah. I mean, I'd imagine like the rails that are being built and the technology that's getting, I don't know, popularized or at least like made more robust now. I can't imagine it not getting adopted very widely over the next 10, 20 years. And I think it could very meaningfully affect like the accounting and tax practices of that we see today. Like, I think it might just be a very different system in 20 years. It in theory, like it should be able to, but as soon as like, I don't know. It's so interesting to try to take this like a new technology and figure out what it'll change. But this is one that feels, I don't know exactly how yet, but we can maybe riff on it a little bit.
Yeah, I mean, like Dan Held's talked a lot about this, and about just this whole new wave of investments that's on an entirely different platform is one of the biggest opportunities for high net worth kind of family office space, because even as it's being adopted by the it's again the incentives issue of, I don't even hold the keys, like you hold the keys, or I mean, Jason's raised a fund but you can, I talk to all these people who do like hard money lending, and you go, hey, Anchor Protocol pays 20% yield on your staked UST. Like, how do you reconcile that between hard money lending and 12%? And there's a lot of risks. And first of all, if you run a good hard money lending business, you can make more than 20% on your capital, because there's fees and there's all sorts of things that kind of drive the rate beyond just the coupon rate. And ultimately there's an asset behind that. There's a house that serves as the collateral for the loan. And a lot of this is just all kind of fairy dust, no man's land. But then again, like,
well, it's digital. Like there's something there. It's just digital, which means that unless you can wrap your head around the algorithms and the trade-offs and the risk and the security, like it is just a different kind of risk than risk that's backed by real estate and the legal system and the sheriff.
Yeah, but then you go to the SEC said they couldn't do it, but the Circle Lend program that got shot down, and that thing, to my understanding, was essentially over collateralized, where you hand them a USD coin and it's backed 1-to-1 by, or more than 1-to-1 by a treasury, and then they're paying you 8% to borrow or to loan that to them so that they can go loan it to someone else for more.
Yeah,
but it's all backed. I mean, that's if and when and once they get that thing off the ground. I mean, the amount of money that's going to flow into things like that is going to just, the money is flowing toward crypto. It's not flowing away from crypto. And learning as much as you can, whether you sell insurance, whether you're a lawyer, whether you're an accountant, whether you're a financial planner, about how this whole system works and about how to help people who have become multimillionaires out of this system is a smart idea. And to make them feel validated and make them feel like they're valuable clients to you. They're not getting a lot of that out there.
And to be in the financial world, I think this will be a very interesting next, 10 years, because I think maybe for the first time, it's possible that just standard like stock and bond portfolio indexing will not capture the value that's going to get created in the next 10 years. Like if the value, you captured the value of tech stocks by just indexing, right? Over the last 10, 20
Yeah.
years, in the dot-com boom, value kind of accrued to those equities. It's possible that the Web3 like value creation will accrue to tokens and protocols that are represented nowhere in the S&P or very, very few places in the S&P.
Even take the S&P and look at Tesla. And Tesla went from $30 and split a few times and went up to, or look at Apple, or look at Google, and look at the growth of those companies from inception to actually when they hit the S&P. And the S&P oftentimes is like, I think the date that Tesla was kind of brought into the S&P is still the highest day it's ever traded at. And we're kind of, so everyone bought your bags, and so that's the thing about index. That's the downside of indexing. Indexing is wonderful and you get to match the market. And when the broader market is capturing value and growing and growing and growing, and we're growing an economy and we're growing technology. And then, like you said, eventually that technology gets captured into the stock system and it grows and grows and grows. It's wonderful, and you can just buy it and set it and forget it. But yeah, if these protocols really do start to take off more so than they have and start bringing money out of the traditional finance system into this system, or even start capturing value out of the traditional finance system where even the money stays in, but the value gets pulled out, then to just forget about this thing and move on and say it's a fad. It would, also I heard a clip where, they're on the Today Show and Bryant Gumbel's talking about the internet, and he's going, what's up with this internet and how does it work? And so it's one college and another and what, and I don't get it. Explain it again. This is ridiculous. And I mean, that to me seems like the kind of the conversation. They're going to play this clip of me. They're going to, we're going to listen to this clip and realize like, what are we even talking about? What do we even know? But I mean, just to me, to remain pretty open-minded and try to jump along. Ultimately, I'm in the kind of, client service business, and I'm young and I get excited and I like learning new things. So this is right in my bailiwick of just trying to jump in and figure out how much can I learn and how much can you help people, and the way you can navigate the regulatory environment. I mean, like, that futures ETFs coming out tomorrow, but to the extent that you can do what Jason Hitchcock is doing and bring people into these strategies who are comfortable with the risks that these strategies offer, but want the returns that they may potentially offer. I mean, it's just a huge opportunity.
Yeah. So as we kind of wrap up here, let's like do a light inventory of all the stuff that you're actually working on, because I think like we've like skipped around a lot.
Sure.
But I do think like you're on a super interesting path kind of as a result of all these things. And there's a lot of seedlings right now that are going to be in a really interesting spot in 5 years. So let's look at what's planted and maybe like hopes for where it'll grow.
Sure. So yeah, I mean, the real kind of ignition for this whole thing was the aforementioned my friend and a huge inspiration of mine, Nick Huber, Sweaty Startup.
Would you just call him your life coach? Is that
my life coach?
Reasonable characterization.
My BFF. Yeah. No, he I met him on Reddit because he was putting himself out there,
Yeah.
and we started working together, and he dragged me on Twitter, and I started tweeting, and it changed my life. So that is I ran a very different business and had different goals for the next 5 years before that happened. And um, learning about crypto, I met that, a couple of my biggest crypto clients, I met them on Twitter, and they started explaining to me what was happening. And, about a year ago, I gained so much conviction that Ethereum was $300, and I started buying as much of it as I could reasonably think to buy, and then a little bit more, and it's really worked out.
Yep.
So,
That's worked out.
And it was, that was a credit to writing my thoughts on Twitter and connecting with other people, and developing my business from there. So the core of kind of what I'm doing now is, and I don't post 50 times a day, but it is putting my thoughts out on Twitter and exploring more about kind of what I even do believe, or how I can kind of say what I do out there in the most succinct way that can really help people. So learning how to do that, learning how to write. I met David Perel at Capital Camp, and was like telling him this whole thing, and he's like, dude, well, you don't have to try to tell me how good writing is, bro. Like, I understand.
I'm
like,
the writing guy. Yeah.
I'm the writing guy. I met him for 2 minutes, and I'm like talking his ear off about how great writing is. Like, stop. What an idiot. So yeah, I mean, if you're not putting your thoughts out there publicly and trying to learn, that's the kind of most impactful thing I've done in the past 10 years of my life.
Yeah.
And then
you got an amazing, your pinned tweet is like a thread of all of your threads, which is like a 101 on every, I mean, it goes deeper on all the stuff we've talked about like how to, synthesize your real estate holdings with your small business, and how to do a 1031 exchange. Like there's just all kinds of cool stuff in there that'll, it'll red pill you a little bit for what's possible.
And it's just brought people into my life that immediately either are attracted or agree or are caught in I don't have to like small talk with people, or I don't really have to like showcase myself to have people believe in
leverage baby.
Leverage baby.
Yeah.
So starting there, and then beyond that, I own a accounting firm and a financial planning firm, and we work one-on-one directly with clients and help them with their financial plans and their bookkeeping and their taxes. And beyond that, just kind of serve as that kind of fractional family office consultant role. And then some things I have in the pipe are I'm working on a course, and almost that we shot it all, and it's in kind of post-production, and I'm putting it together, and I'm going to release that, which is
nice.
In my view, going to be like the pin thread of an interactive pin thread, in that I only kind of, I mean, don't hold me to this, but this is my vision of it. I'd be willing to, I'd love your feedback, but like just the course of all courses, and I'm just going to keep dumping stuff in there forever, and then build whatever I want to build off of that platform, because it's just easier, and I want it to just catch everything.
Yeah.
And I'm working with Charlie Hone on that, which has been exciting. And
he worked with like Tim Ferriss for years and stuff, right? Okay, that's why I know that.
Yep. Yeah, he helped definitely with the 4-Hour Body, and then and
Ryan Holiday maybe too.
He works for Scribe with Tucker Max.
Oh, okay.
He's like the head of digital media and has a podcast with Tucker. And then beyond that, I'm working with a guy, Josh Schultz on Twitter, who's a genius
Oh yeah, I love
about
his threads.
systems.
Yeah.
Yeah. I
Oh,
mean, he's
thank God. Yeah, he's going to help you turn this thing into a billion-dollar creative planning behemoth. Yeah. Totally the right man for the job.
Totally the right man for the job. And our first project is essentially building a bookkeeping application that, you know, for small entrepreneurs that kind of takes care of back-end bookkeeping and helps with tax preparation as well.
Oh, super cool.
It's called Abacus, and yeah, it's just designed to people hate bookkeeping, and I figured out that, you know, a lot of people who come on who are like type A people literally just do their accounting every day on a spreadsheet, and it's simple and it works. And I thought, man, why don't we just make this into a
SaaS tool,
real product?
If all your clients need it, and then you've got the, you know, the audience to push it out to, that's amazing.
So those are my big projects today. And then
that's plenty. That'll keep you busy.
That's enough. It's more than enough. It's running a full-time job, and then and
then a SaaS startup, and then a course, and then you know, and a semi-robust Twitter account, and a family, and you know, and finding, you know, some nights and weekends to be a crypto degen with your Batman mask on.
In the Discords.
We share a lot of like 11 p.m. Discord chats of like, I can't make MetaMask work. God damn it, I'm so tired. I have to get this transaction done.
So that's enough for now. But kind of central point is twitter.com, Baldridge CPA. Follow me there, and then you'll hear about it all.
Cool. Yeah, man, I'm really excited for the course and for everything else you're doing. I couldn't be more thrilled that we get to work together and hang out in various contexts together all the time. So it's a pleasure.
Too, man. I appreciate you having me on to this, and I'm excited to see kind of what you're growing right here. This has been a lot of fun. I've listened to all of them, and it's just unique cast of characters everywhere. I love that you brought, I mean, like, again, bringing Jason into my orbit, who's just a great guy and someone I would have never found otherwise. You know, keep doing that, man.
Yeah, I'm working on it. I have no plan really, other than to just kind of like pull back the curtain on the little circus of friends that I hang out with on and offline every day. So it seems to be, I'm finding it very fun, and it seems to be working out so far. So
yeah, you have a unique take, and you're doing a good job at it. And I'm glad to have met you. It's been fun.
It has. Thanks for coming on, Mitchell. We will do it again soon. Go find him on the Twitters, and go down the Mitchell rabbit hole. And I look forward to doing this again soon.
All right. Thank you, man.